someone who I met through a networking event, and he said, "Well, I've got about 600,000, and I've got friends that would listen to me." I thought like asking for 50K was going to be impossible. And so that opened all the doors. And that was like, okay, I need to do this, double down. And I also need to build the relationship. I don't want capital raising to be, let me call you when I need money.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest is an investor based out of New Jersey, Somerville, New Jersey, involved in over 100 plus units in multifamily, and then also in the mobile home parks and pad space. Please welcome Stephen Carroll. Stephen, welcome to the show.
Thanks for having me. I'm excited to share and talk a little bit about real estate today. It's a fun asset class to invest in. It's been a fun journey for me, so excited to chat with you and to help educate others too.
I think it's always nice to talk to an East Coast guy, because sometimes I'm out here in Texas and I just kind of forget, I stop talking with my hands. I start, pronouncing things correctly, and then I get back to New Jersey and I'm like, oh, there is a, New Jersey way to pronounce coffee, right? And so it's good to have someone from New Jersey on the show here. Are you a lifelong Somervillian?
No, I grew up in a small town called Long Valley that no one really knows about up in northern New Jersey. It's a part of New Jersey where there's farms and fields and trees and cows. So it was nice growing up there. But spent most of my life in Morristown, New Jersey. But I've been Jersey born and raised, so you're going to see me talk with my hands, and you're going to probably hear me talk a little fast. So some people listen to these things with the speed sped up. You might have to slow it down, but I'll do my best.
That is actually something that I noticed. It's a real thing. I mean, when I came to Texas, I came down here around 2019. I was like, wow, people actually do talk faster in the East. Like, that's not a made up thing. Like, we're actually talking faster. And sometimes people thought it was like an act that I was putting on. And I was like, whoa, I got to tone it back because this is crazy. But then also too, the flip side is I really didn't know. And for my Texan audience, forgive me for this generalization, I didn't really know that there were people who legit dressed up like Woody from Toy Story. Like that was their like daily garb. And I was like, no, wow, cowboys literally still exist, like very much so. Like, and I live amongst them. And took me a while, but I got country dancing down. I'm two-stepping. I got cowboy hat. I got, what do you call it? Boot cut jeans, cowboy boots. So I'm all cowboyed up over here, but I digress, Stephen. I digress. Back to real estate. I always like to start off at the top of the show by really asking folks, how did they get into the real estate space? Because everyone's journey is a little bit different.
Yeah. Well, so my journey started back when I graduated college back in 2008. If anyone old enough hears 2008, they're instantly triggered and remember that that's when the legs fell out of the financial markets. And so I came out of college thinking I'm going to get a job in finance and be successful, whatever that means. And I was competing with 20-year bond traders. So I fell into a career in money management, starting in like customer service and working my way up.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
And it was actually interesting. As I started to work with clients and started to be more of a financial advisor, I learned that the people who were doing really well were sitting on the other side of the table and they all owned real estate. And one of my favorite stories to tell is how I remember one of our clients who we became close with was talking about a building they owned. And I was like, what do you mean you own a building? Like, how do you own a building? Like, the companies own buildings. You don't own buildings. And that's when I started to learn that that's something that individuals can do. And it's a great way to both store and grow your wealth at scale. Now, that said, I didn't get started in this in the industry and start going for bigger deals. Although I know a lot of big multifamily educators will say, go bigger, faster, which I agree with. However, I got my start really, really small. I mean, I started with just a duplex. My wife is a nurse and she has a very physically demanding career. So, and there's no pension, right? She's paid
Yeah.
as her hourly rate, and she's in cardiac, and she's one of the best nurses around. And the world needs more nurses like her, but she does CPR for 3 to 4 hours a day, and she's exhausted. So, she wanted to do travel nursing, so needed a place to be able to come home to without paying a full mortgage. Bought a duplex. I bought one in the same growing town. And then eventually, which actually today we're living in one of our duplexes, just to house hack as they call it. And that's a great way for us to. So we did that on purpose just to save money. We're moving. We bought a house together, but that was how we got started. Just duplexes, very small. And then I started learning and growing and exploring the different asset classes and partnering with different people who were looking at deals, someone who would do the underwriting for bigger deals and scaling up. And so over the last 10 years, I've been scaling up to include the 116 multifamily units, the mobile home park with 134 pads, and then a boutique motel and a small business in Kansas City too, just to diversify.
I always hear this now, and I guess it's kind of like the red car theory. You hear it and you didn't think about it before. Now I see it all the time, which is duplexes, triplexes, quadplexes. In many cases, especially if you have the right lender and the right kind of circle around you, it can be easier for young people to qualify for than a traditional single family home. And the first time I thought about it, I was like, that's not right. And I'm a realtor, so I was thinking, who is this person that's going out here and, buying duplexes right off the bat? Of course they've got to start with single family. But then I've had more and more lenders and then investors tell me, no, it's actually a way that a lot of people can get in. Did you know that when you got your duplex that, hey, this is going to be a way where I can get in maybe a little bit easier than some other ways?
Yeah, I'm glad you mentioned that. And no, not initially. But then what I started to hear is people who were doing house hacking. I followed Bigger Pockets, and people were talking about house hacking, meaning living in a duplex, triplex, quad, which is not necessarily considered a commercial property yet, so you can still get traditional financing, and living in it and renting out the other side. And so that's why I started to look into it. And what's great about doing that is whether you buy a single family residence or a duplex, triplex, quadplex, you can still qualify for that FHA loan, which means you don't have to put down the 20 to 25%. In this case, when you buy an investment property that's not your primary residence, you have to put down 25%. Most banks will require. But when you are getting an FHA loan as, hey, this is my primary residence, you only have to put down that 3.5% to qualify for the FHA loan. So it lowers that barrier to entry for people getting in and getting started. It teaches you the game of real estate and helps you practice being a landlord and managing yourself so you know how it works. And then allows you then in the future, you can move out once that happens and buy a future home. You don't always have to live in it. Now you have a duplex, triplex, quad that's making you money. And now you own that property. You probably have equity in it.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
And then you can do that, you can move on to your next property. It's a great way to get started. And I always educate anyone who's like younger, has roommates, look for that first. If I was smarter and if I could look back, I lived with four friends of mine after college. I would have bought a quadplex and charged them rent for rooms or rented it out. And that would have been a way earlier start. But it's a great way to get started.
I want to pivot a little bit here and ask you about 2008. You mentioned getting into the workforce in 2008. Must have been kind of an interesting time to leave college into the workforce, right?
Oh, it was almost impossible. And that was back when home values were like falling apart too. And that was, if only I knew, I would have invested in more real estate back then when there was a lot of foreclosures. And it was scary. It was a scary time. Companies were going under. I remember I had a job offer from a company called AIG, big insurance company.
Yeah,
And
yeah,
all of a
yeah.
sudden overnight, they were like bankrupt. It was like, yep, that offer's gone. So it was definitely a scary time. What I like about the fact that I lived through that is that recessions aren't scary necessarily. You can work through it if you're smart and if you like, especially if you have assets to back you up. And so people keep talking about, hey, we might be heading into a recession. We're probably years overdue. So someone will be right about that at some point. But as long as you look at it with the lens, like if we do go through a recession, that's going to be a buying opportunity. I'm been backing cash just to make sure that if we do have a recession, like that's the time to buy. But it also taught me how many people don't know how to invest, right? So many people lost all their money. They didn't even know their money was invested. And even at the end of the day, if I've got money invested, I do have money in stocks, but I've got a ton in real estate. And at the end of the day, if values go down, there's still a building with wood and windows and an asset to sell at the very least. So, just gives me more confidence going into that. But it was a wild time, I'll tell you.
I can only imagine leaving school and then seeing that, and now you're like a young guy thinking like, I'm going to start my life. And then it's like, not only is no one hiring, but also like they're fighting for survival. Like their family's livelihood is being threatened. They've got, in their minds, like they've got way bigger fish to fry than like hiring recent college graduates. So it must have been crazy.
Yeah, that was wild. It was a good learning lesson though, because my first job, just as a quick aside from the real estate side, I got into customer service, and then I worked for a retirement planning company back when the joke was your 401k became a 201k. And I mean, I was taking calls from people who were calling in saying, "Where's my money?" And it got me used to and familiar with having difficult conversations and
Yeah, I'll
de-escalating
bet.
conversations. It makes it easy so I also raise capital for deals that we invest in, and it makes it easy if I'm prepared for, hey, things are tough, or we have to have a capital call, or people who say, hey, what are you trying to sell me? I can navigate those conversations because nothing scares me anymore. People will
That's
say
right.
weird things to you, over the phone they wouldn't to your face. So it was a
And
good
no
learning
question.
lesson.
I come from a background as a distressed property wholesaler before I was a realtor, and I still have there's a conflict kind of between wholesalers and realtors, which I learned going through real estate school in earlier this year. I didn't know that prior to. I knew there was maybe some friction, but realtors definitely don't love wholesalers by and large. But I worked for 2 years as a wholesaler, and one of the things that I saw was real estate is very much a contact sport. I actually am borrowing that phrase from an early boss of mine in the real estate space, my first job in the real estate world. But going to distressed properties and walking through some of these homes and seeing kind of people, and it's sad, but also where the wholesaler has great utility, seeing some of these people who's, going through very difficult times, either emotionally, financially, or both, probate issues, airship issues, death in the family, divorce, unfortunately, all different types of situations, medical, and seeing that it's not just, a phone call. This is very real, very real. And so if this person doesn't act on this now, situation's only going to get worse. But I do want to pivot here, Stephen, and ask you about.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Scaling in the multifamily space. So you've got 100 plus units that you're involved in. And you mentioned raising capital, which is something that I think interests a lot of people. I can't tell you how many guests I've had on this show who talk about, needing to raise capital for a business. And having done it yourself, what would you say are some of the kind of key or critical pivot points from going from, humble beginnings with a duplex or two to then being involved with deals size of, 100 plus units?
Yeah. I'm glad we're bringing this up because a lot of people ask me, how do you raise capital? What's the best way to do it? And it's the thing that people are afraid of the most. For one deal we had out in Cedar Rapids, Iowa, we raised over $500,000 in a matter of 3 weeks. I've totally raised over $1.2 million for deals that we've been investing in, and I'm raising money for one now. But the first thing that I would say, thinking about the way that I've gone about this, is if you're raising capital, first of all, it takes a very specific type of personality and skill set to do that, because you have to be confident in both your capabilities. If you're in a partnership, your partnership's capabilities, and with what the benefit to that individual is. I spend a lot of time when I meet people and I communicate with everyone that I talk to. And I talk about real estate investing. I talk about what I do. You have to have your 90-second pitch down. Mine's like a 10-second pitch. I make people double-digit returns and give them great tax benefits through passive real estate. You don't swing hammers? Let us do that. And so, things like that, you have to be able to articulate your value very quickly. So practice those things is the advice I would give to people. A lot of times I'll be brought into deals as a capital raiser because of the relationships that I have, my background in wealth management. So I can credibly speak to the benefits of real estate, not just the yes appreciation and we're going to do value add, but things like the depreciation and cost segregation studies and what
Cost
that
seg.
means for an individual, how you can offset it, what you can't offset, because there's a lot of misconceptions there. So there's that. But I mean, to boil it down, don't let me get too far in the weeds. The basic thing is you want to be telling everybody up front as soon as you can that you're investing in real estate, because those relationships are what make investing in real estate successful. And you want people to trust you first. Most times, the investors I've worked with have told me that the reason they've invested was 10% of the deal, 90% trust in me, because they knew, hey, I trust you, and I know that if anything went wrong, you would do whatever you had to do to figure this problem out and make sure our money is protected. And I think that's the most important thing that people overlook.
Now, without giving away all the gold, but maybe getting a little bit granular here, and you can maybe don't give away the full story, but just give us a gold nugget here. When you were starting out raising capital in the real estate space, do you have any pivot points or critical moments where you realize, okay, this is really working, or this conversation went really well, or I need to do more of this, and then you have since either replicated or added to that, or grown from that kind of point. But these kind of aha moments where you say, okay, I'm good at this, or I can do this, or this has been working.
Yeah, when I was raising capital for my first deal, I was actually part of it was a group event, and they were basically allowing people to do a quick pitch. And so I went up and I gave my quick pitch on the deal and how we approached it and how we were conservative on our underwriting. And then I opened the floor to say, if anyone wants to have a conversation, I'd love to just chat through the opportunity. No obligation. And then once we were talking after that pitch, people were pretty impressed, and I got a lot of feedback that like, hey, I look, that was incredible. I'd love to invest with you. Like, what are you looking for? And I thought it was the hard part, right? I thought that asking people for money was the hard part, and then I realized when you approach things the right way and you have a good deal in your hands and you articulate that well and you're conservative on your approach, it's a lot easier to raise money than you think. I remember my first investor, he said, it was a random connection, not a family, not a friend, but someone who I met through a networking event. And he said, well, I've got about 600,000, and, I've got friends that would listen to me. So if things go well, we'll bring more people
Yep.
in. And I was like, I thought like asking for 50K was going to be impossible. And so that opened all the doors. And that was like, okay, I need to do this, double down. And I also need to build the relationship. I don't want capital raising to be, let me call you when I need money. Nobody likes that. But I wanted to build a relationship. I want to know about you. I want to know what you want to accomplish. And then I want to find the deal that's going to align with what you want, give you the option to invest. It's the best way to do it.
I've heard this now from multiple people, and some of the points that you hit on. Basically, tell everyone what you're doing. Have a quick pitch. She mentioned 90 seconds, but you might boil it down into 10. And then this idea that, you may think, oh, I got a raise. You mentioned 50,000, but someone came with potentially 600, and then I've got friends. So you're like, whoa, I was just trying to go for this, but I get, 10 times that much. And so I've noticed that and have had some experience, at least putting feelers out there in the capital raising world, to where we actually had a syndicating attorney on this podcast. And I asked him after the podcast, I was like, hey, this is what I've got going on. I've got potentially this many people. And his advice to me was funny enough. He's like, don't do syndications right now. He's like, go into LLC. It's too much for what you're doing right now. Get an LLC, maybe get some capital, but you don't want the SEC, regulations and potential liability for syndicating. But I had nonetheless had a great conversation with him. Before we wrap here, Stephen, I do want to ask you about the verticals that you're involved in. You got multifamily, you've got, I believe it's the mobile home pads, right?
Mhm. Correct.
Two different spaces, right? But they both have similar principles to a degree. They're obviously great cash flow. Is there a reason that you chose those two verticals, the multifamily and then the mobile home pads?
Yeah, for sure. Real quick before I answer that, I just want to go back to capital raising for just a moment. You hit on tell everybody, and one way I tell everybody, I literally had a shirt made up that says passive income through through real estate tax deductions, and ask me how. So I love to
That's
tell
great.
everybody and ask everybody, tell everyone what you're doing. So anyway, going back to your question on the different asset classes. So I love to diversify and I love multifamily. That's where I got my start. And because I had a duplex and my wife did, I knew the game, right? I knew how it worked. Uh, but then when I was doing that and going bigger and scaling up, I realized that looking at the asset class as a whole and the levers you can pull to create value, uh, you can increase rent and certainly make sure you're adding value to, let's say, bring market rents up to current based on doing certain improvements. And then once you get there, there's not many opportunities from there to continue to add value. And so I was looking for different asset classes to say, well, where is there more opportunity for value? And a lot of mobile home parks I found are very they're utilized, but a lot of them have land that just hasn't been developed. A lot of them have they have no systems in place. They're literally mom and pop owned, and the smaller parks aren't gobbled up by bigger private equity. So there's more opportunity. You can sell off homes. Most mobile home parks, they care more about the land that it sits on, and you own the trailer. We just own the land. Some will actually buy and sell the trailers. I mean, there's so many different levers to pull. And that's why I diversified. So I even have a few short-term rentals in addition. We're in the motel spaces, boutique motel space as well, just to diversify. And I love finding asset classes where you can add value. The more you can give, the more leverage you can pull, the more services you can add. The more I think it's exciting. Multifamily, though, is the best preservation and store of wealth because it always consistently goes up and people always need a place to live. So that's why I dabbled a little bit in both.
Lots of different expertise and exposure to different strategies. I think, I mean, just being able to talk about it can be tricky, but to actually have experience in all those different verticals is impressive. So congrats on your success. We are coming up on time here, though, Stephen. Where can folks go if maybe they're in the tri-state area and have a deal that they want you to maybe look at or get some feedback on, or if they just like to reach out to you?
Absolutely. I'm on LinkedIn. You can find me under Stephen Carroll. I think the link is Stephen, or was it LinkedIn/in/Stephen P. Carroll. I'm also on Instagram as the Do Money Better guy. Created a little persona to share some of my wealth management and real estate tips. And you can find me at stephen.carroll@yahoo.com. I love having these conversations. Please feel free to connect with me. I want to keep this rolling and educate as many people as I can. So thank you for that. And please reach out. Happy to help.
Thank you for coming on the show here today, Steve.
Great to meet you, Dylan.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.